Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, 29th day of March 2018, and this is the Daily Report for Gold and Silver, our weekend review coming to you one day early. Gold muted trading down about 40 cents at $13.2960 with about a 1 cent gain in silver, which closed at $16.34. Dollar relatively unchanged, 89.73, and a nice rally in U.S. equities with the Dow gaining 254 points, closing at 24,103. Bitcoin futures continue their fall with 71.50 and 73.90 as the closing prices for the CME and CBOE exchanges. When we look at the overall week and activity, what we can see is that it really contained extreme market moves, whereas price action on Monday really was a continuation off of Friday's dramatic $20 ascent. The last two trading days contained extremely strong selling pressure. We currently have support at 13.17. If you recall from yesterday's show, we used both a long-term Fibonacci retracement and a short-term Fibonacci retracement to come to that conclusion. First, the long-term retracement goes from 1240 up to 1365. The second Fib retracement study is a very short-term study going from approximately 1306 up to 1356. And what we see is a Fibonacci harmonics, which occurs when two different Fibonacci retracements indicate the same price point based upon a 78% retracement of the short-term data set and a 38% retracement using the long-term data set. It is for that reason that my current short-term forecast is that the selling pressure witnessed over the last couple of trading days should subside somewhere between current pricing and 13.17. We are currently flat after pulling profits on a trade earlier this week. On Thursday of last week, we went long at 13.29. We effectively raised our stops at the beginning of the week and were stopped out with a $7 profit or $700 per contract. Today also marks the final trading day for the first quarter of 2018. And using some extremely long-term technical studies, we can conclude that we have entered an extended multi-year rally. I've just put up a quarterly chart. We can clearly see that since the end of 2015, we have had a clear and defined uptrend, indicating an end to the multi-year correction. But the most impressive observation is found within the MACD, which appears to be entering a golden cross, and that, of course, would indicate an extended multi-year rally, just as it did in 2002. And when we look at the shorter-term monthly chart and the monthly MACD, we can clearly see the point in time in which we had a defined key reversal moving from a bear market back into a bull market. Because these studies are derived from such a long data set, we can't obtain any critical information that will guide us in our day-to-day activity, but we can conclude that over the next couple of years, we should continue to see higher pricing in gold. And most importantly, the current rally could certainly unfold as a multi-year rally going on for at least another 5 years, taking gold to substantially higher pricing. Traders, given that this is the last day of the first quarter of 2018, we took a little different approach to today's show in that we looked at some extremely long-term studies. The interesting thing about the conclusion from these studies is that we have not only entered a multi-year rally, but that rally could continue for the next 5 or 10 years. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Have a great 3-day holiday weekend. Bye-bye.